Warriors of price action and guardians of fundamentals, welcome to Retail Recon. It's time for the March Battlefield Report, your full monthly performance debrief with radical transparency. Today we're establishing new tracking protocols, walking through exact account numbers, trade, profit and loss breakdowns, benchmark comparisons, and what these results really mean for our mission. No fluff, no spin, just raw numbers and lessons learned. Since our last report, I've locked in a crystal clear baseline for measuring success. Total deposits are kept at 40,000 euros or converted to dollars, 46,369 US dollars. That's the demarcation line. No additional deposits, no withdrawals. Our only metric is how far above or below 40,000 euros we climb. Every dollar above is profit, every dollar below is loss. Simple as that. My personal monthly target is to achieve 2% growth above the baseline, and for simplicity, I aim at generating around $1,000 every month. Aggressive, but achievable with consistent discipline. For objectivity, we'll benchmark the account against the S&P 500 using IBKR's official performance calculation. This will be proofed with screenshot proof to remove any hint of manipulation. As I predominantly trade in US equities and options and my base currency is in euro, I also carry constant FX exposure. Performance is hence not only dependent on the trading success but also on current exchange rates for the euro-dollar pair. Side note, I run a separate trading 212 passive account as a control group. No active trading there, just automated €100 weekly contributions into the allocation pie presented in episode 2. Pure experiment to compare active versus passive over time. With that being said, let's go through the accounts and performance as of end of March. As of 31st of March 2026, the account balance stands at 41,091 euros or approximately 47,750 US dollars. Out of those, 1,230 euros and minus $2,150 are in cash. Notice the deployments. I am fully invested and I am carrying a small margin loan, which means my capital is fully at work. Currently, I am holding 18 positions open and they will be disclosed in one of the future Recon Reports episodes. Performance-wise, year to date, I am at plus 1.81% versus the S&P 500 at minus 7.33%. Solid damage control in a choppy month. March standalone, the account grew $504, marking positive territory. Let's now move on to the trades. On the screen you have a summary of realized profits and loss of all my trading activity in March of 2026. The first table shows net outcome on stocks and the second table on options. With stocks, I have realized $172, mostly with covered calls assignment, which is my preferred exit strategy for stock trades. Overall, stock trades constitute about 10% of my trades. The heavy lifting is done with options. On those, I have realized $331 for a net March outcome of $504. That is below my monthly target of $1,000. While the main objective was missed, small victories were achieved in terms of risk management and preventing blowouts. That brings us to the end of the March Battlefield Report. Overall, main objective was not achieved, but the capital was successfully preserved in a very choppy month. We are staying in the fight, and that matters more than short-term victories. The steady grind always beats the boom and bust chase. On our next episode, we will tackle another market foundation. We will address the difference between the ETFs and mutual funds. If you found value in this mission, lock in your support by liking, subscribing, and following our movement. Thanks for standing watch with me today, and until next time, trade smart, risk sharp, and stay on target.